part. Okay, so we are going to work on chapter 3, the accounting information system. The first learning objective is analyze the effect of transactions on accounting equation. So accounting information systems have some important components, okay? So, and then these ones are following a sequence of order, okay? So the first one is analyzing a transaction, okay? So if there is a transaction, okay, you first have to analyze this transaction. Does it have any effect to the accounting equation, right? So how does that affect the accounting equation, which we have talked quite a bit over the last few lectures? Asset equals liability plus equity. And then if there's the effect, so which accounts that effect is on? Should you debit the account or should you credit the account, right? So when we are talking about the issuance of the common shares, preferred shares, right? We analyze, that transaction will actually impact my accounting equation because my cash balance will increase and my shareholders' equity balance will increase. And we have learned that to increase asset balance, we debit. To increase equities balance, we credit, right? So we're gonna talk more about this in today's lecture, and you will be more clear about what I'm talking about. So, and then once you have this analysis, you are going to make journal entry. Okay, we're gonna say this is the journalizing the transaction. Always say we make an accounting journal entry. Okay, and then these journal entries will be posted to the general ledger. Okay, the general ledger contains all the information of different accounts, right? For company, they have various numbers of different accounts, and so that the ledger will consist of all these chart of the accounts. Okay, so then how does each transaction affect each account? Those effects will be posted to the ledger to under each account. And then the last step is called preparing a trial balance. So what is a trial balance? Trial balance shows the balances of all the accounts for the company as of the fiscal year end of the business. Okay, so you summarized all the accounts balance information. Okay, and that's called a trial balance. The reason why this is a trial balance is this balance are subject to be revised, adjusted. Okay, there are transactions, there are journal entries have to be made. Okay, have to be made after the trial balance. Okay, so that's why it's called a trial balance. Okay, this is not a finalized balance. Okay, more work has to be done, more adjusting entries has to be made. And we're going to learn more about that. What do we mean by adjusting entries in chapter 4? Okay, so that's kind of the major process. First, analyze the transaction. How does that affect my accounting equations? Specifically, how does it affect my accounts? Which accounts? Okay, do you debit or you credit that account? Then you're gonna you're gonna make a journal entries, okay, on the general journal, and then you're gonna post all these transactions into all the charts of accounts on the ledger. And then with all the information at the fiscal year and date, you're going to pull out all the information to prepare a trial balance. So we call this is part of the accounting cycle. So once we learn everything, this process will be more clear because you have to be able to think in terms of this accounting cycle. Okay, so this accounting information system is used to collect and process transaction data and communicate financial information. Okay, so it's really important, right? It's really important. This is the system where you are collecting the information, processing the information, and being able to, presenting this information, right? This system can vary quite different depending on the size of the company, the type of the business and its transactions, the amount of the data and information needed by the management and others, right? So think about McDonald, right? McDonald, the company, versus there is my favorite restaurant is a Vietnamese restaurant in North Lethbridge. It's called the Spring Roll. Okay, so that small Vietnamese restaurant is managed just by the couple, right? I think the husband and wife, both of them working really hard. Okay, so they are working in the restaurant. So if you compare that to company, obviously, McDonald, the size of McDonald, the business size is much bigger than that small uh, family-based restaurant in North Lethbridge, right? So if you ever been there, so it's very interesting. McDonald's would have an information system, right? So when the customers are placing the orders, that order information, right, will be all collected into the system, right? And it's all based on electronic data information, right? And the McDonald's manager, the owner, wants to see every day how many sales they made and on what products, right? And at what time, right? So those would be very important informations for the company to make decisions, right? So you probably know that McDonald's offers like all day the breakfast, right? So what my favorite food is that sausage egg muffin, okay? And so they serve all day breakfast, okay? So isn't that funny? You think about it, right? It's breakfast, right? How come they serve it all day, right? So they must, based on the information they collected, right? People are still asking for it, right? Even though it's the lunchtime or the dinner time, people are still buying these products. And that is why it was served um, all day, right? So they must have that information. Otherwise, they will not make that decision, right? If you ever been to the restaurant on the north side, Lethbridge, um, so how they collect the information, right? They use the paper and the pen, right? So what do you order? They would write down the number of the number of the dishes you ordered, and then they will quickly use a calculator to figure out how much you have to pay, right? Hopefully, you know, their math is pretty good. Well, they from Asia, from Vietnam, so hopefully their math is pretty good. I can trust. Okay, they are not overcharging me money. So the idea is, the reason why they are able to do it manually is because they do not have large amount of data, right? So they don't have that many traffics in the restaurant, not even comparable to McDonald's, right? So therefore, it's manageable for them to just use the most traditional basic way to record all this data information, right? So just manually write down everything and pl- punch on the calculators to figure out what's the amount, right? So again, it's really depending on the size of the company and what is the amount of the data you are processing every day, the type of business, right? And the information needed by the management. So they will use different type of accounting information system. Okay. So most of the business nowadays are using computerized accounting system. Okay. So because it's more efficient and it especially in nowadays in North America, the labor cost is very high, right? So it just makes sense to automate, right? Most of the process using computers. I'm looking forward to see how does AI will affect our life. Okay, right now, um, I have my own accounting firm, so that does help, right? The AI, it does help me to draft letters, right? Sometimes it help me to create images, right? If I need to present to teach on certain materials, I was looking for an image to be on the slide. AI is able to help me to create the image rather than me searching it on Google. Sometimes you don't get the one you need, right? So accounting cycle, so the first, starting from the very beginning, you analyze the transaction, and then you make the accounting journal entry, and then you post it to the ledger, to the accounts, and then you come up with the trial balance. Okay, so chapter 3, we are dealing with 1, 2, 3, 4, the first 4 elements. That's the chapter 3. Okay. Okay, steps in recording process. So step 1, analyzing each transaction to determine its effect on accounts, if any. So the evidence comes from a source document, right? So source document can be a receipt, right? So if you, you pay Best Buy $100 to buy a computer for a company, right? You receive a receipt, right? So that would be a source document, and you place the order, right? And that would be the source document as a proof, as evidence showing you this business transaction, right? And record transactions as a journal entry in the general ledger. So in my example, I'm paying Best Buy $100, so my cash balance decrease, right? My equipment account balance increase, right? So in that case, um, I have to make a journal entry. So I can do this very quickly because I'm doing accounting for many years. But you hopefully will do the same thing. So basically, you debit computer equipment for $100, you credit cash for $100. So this will be your journal entry for the step 2. Step 3, you transfer the journal entries recorded to the appropriate accounts in the general ledger. So basically, I'm going to increase my computer balance by 100. I'm going to decrease my cash balance by 100. So on the general ledger, I have a equipment account. I also have a cash account. So I will make sure, I will post these balances into the corresponding accounts. And the last step is to prepare a trial balance, okay? So do we have any questions so far? Does anyone have any questions so far? Okay, if you are good with me, move on. Give me a sum up. 1, 2, 3, give me a sum up. Okay, awesome. Thank you. Okay, so accounting transactions. So accounting transactions are transactions that are economic events that must be recorded in a financial statement. Not all events are recorded and reported as accounting transactions. Only those that affect or changes asset liabilities and or shareholders' equities account. So there are lots of events happening, right? But not all the event is going to affect my asset, liability, or equity, right? So only those events that do have implications, those are the transactions that of our interest, right? So I will work on this with you guys. Okay. So the event is purchase a computer. Now you think about it. You purchase a computer. Is the financial position, assets, liability, or equity of the company changed? Should you record it? Anybody? Yes, yeah, that's good. I know Meet said yes. So yes. Why? Because your eyesight, equipment eyesight increase. You have a computer, the company now have a computer, right? So that equipment, computer equipment increase. Well, you pay the cash, right? So your cash eyesight decreased, right? So one eyesight increase, the other eyesight decrease, right? So you have more equipment, you have less cash, right? So it does affect the financial position. Next one, discuss product design with a potential customer. So the business, okay, the workers, engineers discussing the product design with a potential customer. Does this affect the financial position? No, right? No, good. Yeah, yeah, awesome. So it does not affect asset liability or shareholders' equity, right? The customer will not pay you for that discussion, right? You are not making money, right? So it's just a talk, right? It's just a talk. So in this case, there is no record, right? There's no record. Next one, pay rent. So you pay rent. Probably many of you are paying rent, right? If you don't have your own house as an international student, you are paying rent. So I remember when I first came to Lethbridge, I was paying probably $300 for a shared room, not for the whole house. Okay, this is back in the dollars of 2004, 20 years ago. So I shared a house with several other students. The room I paid is $300. I don't know how much you are paying right now. Probably more than what I pay. 500? Okay, almost doubled. Almost doubled. Do you guys all pay 500 or 500 is 500 is a normal price or it's what about the other students? Anyways, so you are paying the rent. You are paying the rent. Is this affect your financial position, asset, liability, or shareholders' equity? Yes. Okay. Can anyone may try to tell me what has increased, what has decreased? Oh yeah, very good. Camel Preach says that it will decrease cash. Yeah. Liability has increased. Yeah, you have to pay the rent to the landlord. Yeah. If you have paid already, then expenses has increased. The rental expenses has increased. Okay, very good. So you have to record. You have to record this. Okay, so the transaction analysis will determine on impact on the accounting equation. Assets equals liabilities plus shareholders' equity. This equation has to be always balanced. Okay, it has to be always balanced. If at any time your total asset does not equal to the sum of liability and shareholders' equity, something is wrong about your journal entry. Okay. Each transaction has a dual effect. Okay, we call it a double-sided effect on the equation. Each transaction would have a dual effect. So this balance equation has to be always balanced. Okay, so we know asset equals liability plus shareholders' equity. We have already learned about shareholders' equity. Can anyone tell me what are the two major components for shareholder equity? I have learned about this before. There are two major components or shareholders' equity? Can anyone tell me that? Common shares and return earnings. Very good. Good job, guys. Very good. So you have common shares plus return earnings. So that's your shareholders' equity. Okay. Now, how did you calculate return earnings? We have also learned this, right? How did you calculate the return earnings? What will increase return earnings? What will decrease return earnings? So we talked about this before. Let's see who can help me with this. Okay, very good. Net income increased, dividend decreased. Net income minus dividend paid. Awesome. You guys all both correct. So now, what is my net income? Can anyone tell me how did I calculate my net income? Okay, by revenue minus expenses, income minus expenses. Yes, very good. So I use my revenue minus my expenses. That's my net income. And then I minus the dividend declared. That will be my return earning. Okay, so you can see that this is my accounting equation, right? So the accounting equation, okay, okay. So now I need to move all these items to see that better, okay? Okay, so basically if I rewrite this, if I rewrite this equation, so you have asset equals liabilities plus common shares plus revenues minus expenses minus dividend declared. That's the equation. If you rewrite the equation. Okay, so asset equals liability plus common share plus revenue minus expenses minus dividend declared. Okay, now I'm going to move these expenses and the dividend to the left side. Why? Because in front of these two accounts, the sign is minus, right? Both are minus. So if I move these items to the left side, change the side of the equation, they're gonna switch, they're gonna flip the sign. The negative will flip into positive, right? So now I'm going to get asset plus expenses plus dividend declared equals common shares plus, oh, sorry, here it equals liabilities plus common shares plus revenue. Is that clear? So I'm going to use some color so you see the difference. So when I'm moving, this is just algebra, right? You should know this very well in the probably junior high school, right? Grade 7. So you have an equation, right? Left side, right side. Those items, when they switch the side of the equation, the sign in front of it has to be flipped from positive to negative, from negative to positive. So I have negative expenses, when I move it to the other side, it's a positive expenses. I have a negative dividend declared. I move it to the left side, it's a positive. Do you know this? You should know, right? Are you okay with this little bit algebra? Okay, if you're okay, then show me. Give me a sum up if you're okay with this little bit algebra. 1, 2, 3. So I didn't do too much, right? I'm only moving two items from the right side to the left side. And once I switch the side of the equation, those sign in front of the items has to be changed to the opposite. Yeah, that's pretty easy. Okay. If you're from Asia, right, you should be good with math, right? So, okay, here. Remember this equation. We're going to need this equation later on, okay? So the summary, let's take a look at this. So this is there are 14 events, right? What I want you to do is I want you to tell me the story. So you only see these numbers, right? But I want you to tell me what is the transaction, okay? I want you to tell me what's the transaction. Okay, first one, your cash increased $10,000. Your common shares increased $10,000. So what happened? Yeah, you debit cash. Common share issued. Very good. So you have issued the common shares. So you received it. You issue the common shares to the shareholder for cash. Your cash increased 15,000. Your common shares increased 10,000. Sorry. Okay. Yeah. Debit cash, credit common shares. Very good. So now let's move on. So your cash increased 5,000. Your bank loan payable increased 5,000. So bank loan payable, this is a liability. So the payable to the bank, you owe money to the bank, right? So what happened here? What is the transaction? Take bank loan. Very good. So you borrowed money from the bank. You borrowed $5,000, right? So your cash increased because you get money from the bank. Your cash increased 5,000, but your liability also increased 5,000, right? Your liability also increased 5,000. Okay, very good. Next one. So your cash decreased 5,000. Your equipment increased 5,000. What happened? Purchased equipment using cash. Bought equipment. Very good. Awesome. You guys are very smart. Good job. So you purchased the equipment. That cost is $5,000. Okay, $5,000. Debit equipment, credit cash. Very good. Next one. What happened here is your cash decreased 900, but your expenses increased 900. And the reason why there's a minus, that minus comes from the minus sign in front of it. Okay, so what do I mean by that? So how should I do that? Let me just use this. I need to use a shape. Let me draw a shape because I want to explain this to you. Did you see there's a minus sign here? This guy, I need to change the color to this. No. Okay, and then format panel. Sorry, it's on this side. Yeah, so fill transparency. So did you see here? I just used the yellow highlight here. There is a negative sign, right? So this negative sign is coming from this negative 900. That negative comes from that negative, okay? So basically, your cash decreased 900, your expenses increased 900, and this negative comes from this negative. So what is happening here? I see. Incurred expenses. Yeah. Incurred expenses. Very good. Yeah. So your expenses increase at 900, but according to the equation, there's a negative sign. Okay. So it works out the same. So the left side of the equation decreased 900, the right side of the equation decreased 900, right? So the balance are still balanced. Very good. You paid one expenses. So the expenses is $900. This one, you paid $600, you purchased insurance, prepaid insurance, $600. What about this one? Your supply increased 2,500, your accounts payable increased 2,500. So your supply increase, which is asset, right? Supply is asset. So for example, at UFL, we have lots of supplies. We have supplies of paper, markers, right? Erasers, pencils, pen, papers, exam papers, right? So I can just go there, take them to use it, right, for the class. So those are the supplies, right? So the supply increased 2,500, accounts payable increased 2,500. Purchase supplies on credit, yeah. So basically, you purchase the supplies, but you haven't paid the supplier yet. That's called accounts payable. Accounts payable is the money you owe to the supplier, okay? So very good. This one, your accounts receivable increased by 20,000. Your revenue increased 20,000. Okay, so revenue, what is the revenue? Revenue is the sales revenue most of the time. It's about the income you are making, right? The sales you are making. Accounts receivable is the money that the customer, they should pay you, but they haven't paid you yet. You need to collect it from the customer. Right? So your revenue increased by 20,000. Your accounts receivable from the customer increased by 20,000. So what's happening? So tell me the story. What is this transaction? Customer is owing the business 20,000 for good. Very good. Yeah. So basically, the company just made a sales of $20,000 on credit. So the customer purchased something, the value is 20,000, right? But they don't have the money to pay the company yet. Okay, so I'm not going through all of them. I want you to do this by yourself. So this is my first objective, learning objective. I'm going to stop recording.